All right, folks, just got done doing some research on long-term care or continuing care retirement communities and some of the deep discounts you can get with long-term care insurance. And this is going to be a quick one because I just needed to get this off the top of my head. So welcome to Heritage Wealth Planning, the place where you come on YouTube to learn about continuing care facilities, assisted living facilities, everything retirement planning under the sun, financial planning, estate planning, investments, you name it, that's where you are. So hit the link, the subscribe button down below if you're interested in this kind of stuff, because we're doing at least one video a day, just lots going on here as I do these research, these deep dives into these facilities. I couldn't believe it. So I'm looking at the AXE Retirement Life Communities, and they got, I think it's like 20 or something. Yeah. So they got like 20 of them. Look at these guys. And these are AXE Retirement Life Communities. And they're the ones that are Lanier Village Estates here up in Lake Lanier, but they got them in Pennsylvania. They got them in Florida and Maryland and Delaware. Just you name it. They got a ton of them. And I like them, frankly. I think they're pretty good. They got them in Alabama. That doesn't mean it's an endorsement. Not any stretch of the imagination. Not endorsing that place. What I am saying is they offer you significant discounts if you have long-term care insurance. Significant. We're talking if you're paying the average fee for you and your spouse, it's $3,500 a month to get in. It's only about $2,200 a month, depending on which one you go to. And don't quote me on that. You got to look at yourself because they got 20 different ones. We're talking significant discounts to the fee that you pay, not only as a monthly fee, but the entrance fee as well. Huge discount. So again, if you're going to pay for one of those 50 life care 50s, which means you get a 50% rebate when you die or leave the facility, it goes back to your estate. And I'm not a big fan of doing that, frankly, but I don't know why you would, but I get why people do because they want to make sure they're leaving something to the heirs. You're going to pay about 175% of the regular normal fee. All right. So let's just say the regular normal fee is $300,000. You're going to pay about $450 for the life care 50. On top of that, you're going to pay a higher premium every month, about $5,000 a month, dude. I'm just using this as a general. This is for the one for Huntsville, Alabama. It might be different in your neck of the woods in the Northeast. It might be higher in Philadelphia than it is in Huntsville, Alabama. I don't know. You'd have to look at it. We'll dive into more of those later on. But you're going to pay, say, $450 on the front end as an entrance fee, $5,000 a month for you and your spouse as a monthly fee. All right. And the point about that is you're going to say at the end of the day, when we die, $225 will go back to our heirs. It's not adjusted for inflation. You get no interest, which is why I'm not a big fan of that. But anyway, you know that if you die, as long as the AXE Retirement Life Communities are still in existence, they're going to get that $225. There's something to be said about that. Now, if you think about the average, the regular, the life care one, which is you're basically paying a higher monthly fee. That way you don't get hammered on the back end if you go to assisted living in a nursing home. You're going to pay roughly $300,000 to get in as your entrance fee, and then you're going to pay about, I think it was about $3,500 a month or so, maybe even no, it's $4,200 a month. That's what it was for you and your spouse, and that's nothing wrong with that. I mean, $4,200 a month, $300,000 to get in. But here's where it gets big. If you have a long-term care policy, long-term insurance policy that has comprehensive coverage, your fee to get in $220. Your monthly fee is about $3,000. Again, don't quote me on specific numbers. It's completely contingent on you. I cannot stress that enough. But your monthly fee is significantly less than the regular life care fee, which is significantly less than the life care 50 fee, which is where you get your a rebate of 50%. And the reason for that is because they feel they can bill your long-term care insurance for the increase in cost that they're obligated to provide to you if you go from independent living to assisted living to nursing home care. And so they're saying, no, we love the fact that you are going to pay the monthly fee for those long-term care insurance, which means we are inherently not on the hook for that. And if we're not on the hook for it, we don't have to bill you for it, because that's essentially what they're doing when they're charging you a $4,000 a month monthly fee is they're billing you essentially for long-term care. They're basically charging you that for your long-term care insurance if you need to have higher care on the back end. Well, the question, of course, always comes to me, what if you don't need it? Well, did you pay for nothing? Well, I have a homeowner's insurance. If my house doesn't burn down, did I pay for nothing? Of course not. I pay for the insurance. I'm covered if something were to happen. So the issue is, let's say you have long-term care and you're like, I don't think I need it anymore. I'm never going to use it, blah, blah, blah. Hey, honey, let's go look at this continuing care retirement facility. and see if we want to move in there. Well, we can save $300 a month by getting rid of our long-term care insurance policy. You're going to pay more than that by essentially buying the CCRC's long-term care insurance policy through a higher monthly premium. So don't do that. If you're paying $300 a month right now, all right, that is $300 a month. That's no, about $700 a month you'll be saving from buying essentially their long-term care insurance policy. So the moral of the story, if you have long-term care, don't just get rid of it simply because you think you're getting too old or the premiums are too high. If you think there's a good possibility of going into a CCRC or assisted living facility, you need to use it as a bargaining chip. Hey, we already got this coverage. What do you think? You got to make sure it's comprehensive. You got to make sure they take it, your CCRC. And what I mean by that, if you have some like a hybrid policy, that's a life insurance, I don't know if they'll take it. I don't know. I don't think they consider, maybe not, when I was doing this, they didn't consider those life insurance policies with a long-term care rider. They didn't consider that comprehensive. I don't think they consider the variable annuities that you can get too, the annuity contracts they can get with a long-term care rider on there as comprehensive either. They might today, I don't know, but that's up to you to find out. You might have a variable annuity that has a long-term care rider, R-I-D-E-R, attached to it. You might have a life insurance contract that's got a long-term care rider attached to it. You got to make sure your long-term care retirement facility understands that you have those. That way they might give you a pretty significant discount, not only on your monthly fee, but on the interest fee as well too. You're talking huge amounts of savings here, huge. So looking at that. Now, if you're on the younger side, say you're 60 and you're in pretty good health and you don't have any issues up here, you might want to go ahead and just say, I might buy a long-term, sorry, my phone is ringing. I might buy a long-term care facility insurance policy right now. So that way, if I can spend $300 a month now, knowing full well that when I hit 70, I'm going to CCRC, that will be a significant discount on my coverage or my cost when I go to the CCRCs. Now you have to factor in, do I have my calculator? Yeah. So you got to factor in, you're going to pay $3,300 a month now, times 12, that's $3,600 a year for the next 10 years. That's going to cost you $36,000 a year, or not year, between now and 10 years. And that's without even including any cost of living adjustments or inflation. So you're going to pay $36,000 right today over the next 10 years before you go in that CCRC, which might save you $1,000 a month. And we got to factor in those numbers in terms of net present value. Is it worth doing? I think absolutely. But you got to find out for sure. That's going to be contingent on what your needs are. And if your needs are such that you think there's a pretty good chance you're going to need long-term care and it's going to cost you out the, through the nose, you go ahead and get insured against that. Lastly, a lot of people can do where you get a life insurance contract will have a long-term care rider to it. And that can be just a lump sum of $50,000. And what I like about that is you put a $50,000 in a life insurance contract, you get the equivalent of $220,000 of a pool of money that can be used for long-term care. And at your death, if you never use it, that life insurance money, basically $100,000, $150,000 or something like that, goes to your heirs tax-free. That's a good deal if you have the $50,000 cash just laying in a side account of some sort. So I don't have any problem with that whatsoever. It's been a long, long time since I actually did these and sold these. So I'm not as familiar with the new products today. I am going to interview a guy from the Guardian Insurance Company here pretty soon. I'm going to talk to him all about that for sure. But again, you got to find out if that long-term care that you get through a life insurance contract is compatible for what your CCRC offers. And I'm going to actually dive into one of these. I'm going to call them up and see, because that'd be interesting to know. Anyway, hope you like this. Hope this helps. Again, a pretty short one here today, but I wanted to bring that to you in front of my head, because if I don't, I'll know I'll forget. As always, you like the information here, click on the subscribe button down below. Hit the bell to be notified for future content. We're doing a video a day here at Heritage Wealth Planning YouTube channel. Thumbs up and comments. Thumbs up and comments, always welcome. If you're an insurance guy and you have a comment on whether or not your history is or your experiences that CCRCs offer compatibility with long-term care riders on a life insurance contract, man, please put in the notes. Lots of people would like to see that. And if you're a client who thought you had a long-term care insurance that was compatible and turns out it's not, of a CCRC, please put down in the comments too, because you can help an amazing amount of other people. Don't forget to go to the blog, heritagewealthplanning.com. Got the podcast, the blog, and the videos are up on there as well. And we'll see you next time on Heritage Wealth Planning YouTube channel. Thanks, guys.